And yeah. Okay. So yeah, guys, as we closed above the sell side liquidity, we were looking for bulls all the way into this fair value gap right here, right? And then we wanted to see how the market is going to behave. As you know, the market is always attracted to liquidity and fair values. By liquidity, we mean previous highs and lows. By fair values, we mean these gaps right here. So yeah, guys, as you can see, the market went into that zone and we are still very much bullish. So now with the current momentum, I am going to now also look at this buy side liquidity, this high right here, as a potential place that they might reach. Why? Seeing the momentum of this whole week, last week, and also the fundamental news we have. So at max, they might just tap into this order block and then just take heed of what the market might do there, because if they do show some change of characters, then you can maybe scalp a little bit to the downside. And just to move to the H4 for a deeper view, deeper perspective, as you can see, guys, we've been forming higher highs, and just higher highs, right? We've been just going all the way up, and we tapped into 50% of this fair value. And now, as you can see, we still haven't lost some steam to the upside. So the market is still very much bullish, right? So personally, I am still looking for bulls all the way at least into this zone right here, this order block right here. And some might say it's a resistance right there. And then if the market violates it, it's definitely chasing this sell side liquidity. I mean, buy side liquidity right up here, right? And as you can see, that high has been very much protected because the market tried to go there dozens of times and it couldn't reach that. So there's quite a lot of sellers resting in that zone. So, okay, with that said, let me move into the H1 time frame just to give you a nicer perspective. Let me just move this, a nicer perspective. And as you can see, guys, the market is very bullish. So any pullbacks to the downside, be very wary because we haven't got any changes of characters. By that, I mean all the daily lows we have been respecting. Each and every daily low we've been respecting. So we keep forming higher highs and higher highs. Don't mind these internal lows right here because they really don't count as much, seeing that we are bullish. So on AUD/USD, guys, look for buying opportunities. Just look for buying opportunities. And I'd say looking at this zone right here, that might be a lovely zone to also tap into. Now, with that said, let's just move into the next chart. Let's move into USD CAD. Boom. USD CAD, as I said, guys, it's looking very bearish. It's looking very, very bearish. It matches the dollar index, as I said, even last week, that we need to tap into this daily zone right here, this daily fair value gap right here. And we've tapped into it. And as you can see, the market is losing a little bit of steam, but still forming lower lows, meaning the bears are still in charge. And when we go to the H4 time frame, you can tell that it's the inverse of AUD/USD because the market is now attracted to this low right here, this order block right here, this supply zone / support. So I highly, highly think that the market will actually reach that zone before any bulls start to come in by force. And if it breaks that zone, of course, it'll be heading for this fair value gap. And right there, we can easily start looking for buyers because even if you're a trend line trader, you can tell that at that zone, there'll be quite a lot of buyers. So yeah, guys, USD CAD is still very much bearish and you can look for sales in on USD CAD up until at least those zones right there. So hopefully Wednesday and Thursday, the news that hits is going to shake the market up perfectly so that we can confirm to ourselves that, yes, the bears are still in charge and we'll just keep being in charge the whole week. So yeah, without wasting any more time, let's go to gold because I know a lot of you like gold. So with gold, guys, as you know, last week I said we have two zones that we're looking at, which was this one, and we reached that, actually made quite some nice coins over there. And then the other zone was all the way down here. Now, as I said, that the market is highly likely to react at this zone and then push all the way up to fill this fair value gap. And that's exactly what it's doing. So the buys that people were taking a lot of people are very frustrated because the market is not pushing the way they wanted to push to the upside. And the only reason for that is that the bears are still very strong. So the buyers can't just take control of the market when the bears have shifted character to the downside, right? So with that said, as you know from last week, I marked two fair value gaps, which was this one up here, and I marked this one over here, right? So as I said last week, that if you're going to buy, you're going to buy into this fair value gap and then look at how the market behaves, and you can also buy into this fair value gap. So moving into the H1 time frame, you can tell that 2350 is a very strong price right here. 2350 is a very strong price that's holding, and it's been holding for quite some time. So if we see ourselves breaking above and closing above 2350 by forming higher highs, then you can easily trade gold into this fair value gap right here, which is a lovely 200 pips, guys. So yeah, just to recap quickly, on odd USD, we're still looking for buys into these levels right here on the daily time frame. On USD CAD, we're still looking for sells into these levels right here. And on gold, we're still looking for buys, but short-term wise, up until this fair value gap here. And if we get changes of character at that zone, then of course, guys, we can officially sell the market into these levels right here. Right here. So basically, that's what we're looking at. And with that said, guys, that is it on my side.
That's it on both our sides. Guys, let's get into, like I said, that this week is going to be quite a busy week. Let me just sorry about that for reclaiming hosts just like that. But
No,
yes,
no problem.
as I said, that guys, it is quite a hectically loaded week because we have the CPI, right? We have a CPI coming through. We have FOMC coming through. CHF CPI. Please don't confuse it with the dollar CPI. CHF CPI coming through, and then we have NFP on Friday. So do like I said, that do, especially on Wednesday, be a little bit careful. You can go more aggressive on NFP, but for now, for Wednesday, please guys, like I said, that if you know the margin is not margining, then just rather stay out of Wednesday. Take the smaller trades. Take the smaller trades outside of the dollar pairs. Obviously, like I said, that on Euro JPY, Euro GBP, we are looking at a bit of a sell. Right now, it is holding that price, but I do think that especially with the volatility that FOMC is gonna bring and NFP is gonna bring, I do see the Euro GBP falling down to the downside, breaking this low and potentially finding rest again here at this. And check how round of a number this is: 85,000. So I do see that happening. And guys, what else can I say? There's a lot that I can say, but this is not the session for that. But happy trading, guys. And we are open to more suggestions, something that you might want us to do, might want us to look at and cover. I am seeing people are asking about indices quite a bit, so we might go into that. The problem is I don't want to analyze a market. I don't trade. You know, it's like when I'm not trading, I don't like sending signals to people because kind of that feels like a lie. You know, so I like being involved in trades where or sending signals to trades that I'm actually involved in, and yeah, I think that's just about it. Sorry, it is half recorded. Can I give somebody the responsibility that first thing on Monday when they come in on the chat, they just type record all caps with 10 exclamation marks, so I can remember to record this for you guys, because I know that some people like to brush up, or some people they have like network issues and stuff like that. That just prohibit them from joining the session. But yeah, guys, lovely session. Thanks for coming through. I like the turnout this week. It's pretty much double from last week. And yeah, we must gun for by at least the end of May that we start getting 100+ participants. But shout out to everyone. Your time is much appreciated. Take care.
Don't go full McCain.
Don't go full McCain. Cheers, guys. Cheers, guys.
Cheers, guys.